So, how many people, here you guys are aware about partnership accounting or partnership business? Come on. Are you guys aware about partnership business? Answer me in yes and no. If you are aware about partnership business, say yes. If you are not aware about partnership business, then say no. Quick. Yes, no. All right. See, partnership businesses, again, plays very crucial role in startup ecosystem and provide, funding to the distressed businesses or the businesses like, which are at a very growing stage, or even businesses which are looking for a short-term funding before an IPO event, like, to fulfill the working capital requirements, right? So private equity funds basically provide funding to those businesses. See, private equity, funds or private equity market, which is contributing a lot to the startup ecosystem and helping, to like become multi-billion-dollar company. If I talk about SpaceX, SpaceX has received huge funding from the private equity fund. If I talk about, let's say, Twitter X, again Twitter X received huge funding from the big, the global players. If I talk about, let's say, the Zepto, again Zepto, or the other companies like Porter, or even, for that matter, the Zomato and all they had received funding from the top private equity funds. See, basically, private equity funds, they tap the potential, the multi-bagger investment opportunities at a very early stage. Means, let's say, once the venture capital infuse funding to the businesses, then they start, means private equity funds, they start, tapping or tracing that business metrics, market, product, and service. Once they feel that, this business has a potential, then they quickly, schedule a call with promoters of the business and uh, invest money in a businesses at a very early stage. If I talk about IRCTC, the IIFL Securities, the alternative investment fund, means private equity fund, had invested money in uh, IRCTC, and they have generated 4,000 percent return in just 2 to 3 years. So that's how, see, private equity funds, they are famously known for targeting the unlisted companies or private limited companies or startup companies, or even the distressed assets or companies who are like facing huge debt crisis. Private equity funds target to those businesses, support them, revive the business again, right, and sell it out business in the market to the other businessmen or companies at a higher price. So that's how private equity funds, they actually deal with the market opportunities. Right, now if I talk about structure of, the private equity fund, see, hedge fund and private equity funds, you find some, sort of similarities. Why? Because in a hedge fund, what we have seen, just go and see the structure. So we have discussed the structure like uh, the, the investors invest money, fund managers like raise funds and invest funds in a different schemes. We have discussed this module, right? And the GP and LP, general partners, it means fund managers, or LP means investors. All they come together, contribute money, invest money, and fund manager take care of the management of money and everything. They sign LPA. So we discussed this module, right? So same basically, the structure which you can see in a private equity, guys. Private equity and private equity and hedge fund structures, you find more, the similarities between both the structures. So if I now chart it out the structure quickly to make you understand how it looks like, I would like to draw. You can see like GP would be your investors, fund manager, then LP, investors. See, if I talk about investors in here in a private equity, so most of the investors would be, guys, insurance companies, big investors, then family funds, it could be PF funds or universities, HNIs or individuals, they also contribute, and even to some extent government also, or government sponsored entities can invest, means join as a, the club of private equity as a limited partners basically, right? So these are the limited partners. And if I talk about the general partners, see, the general partners would be like the Blackstone Group, means as an entity can, manage it. Even it could be, let's say, individual, any entity or want to work, let's say if anyone want to work as a fund manager, that person can also, work as a fund manager. And even it could be any third entity also, which can provide that services. All right. So now if I talk about, let's say, the agreement, see, both the parties sign the document which is LPA. Write down it, which is uh, you know the limited partnership agreement. Both the parties sign, and that's how they establish their partnership. Which is limited partnership agreement, and they define fund terms or partnership terms. Partnership terms. So partnership terms include fees, then closing, commitment, waterfall, and fund closing or liquidation or exit. So all that comes under the partner, your LPA agreement. LPA terms. Fees. Let me just put it in chart so that you know when you refer this, even in future it looks more professional to you. Right. Okay, so if I talk about, let's say, fees, the management fees you might see, which is 2%, so every fund charge it, and the incentive fees, which is 20%. But the same fund, like private equity fund, the charge, the carried as well, carry fee, which is up to 20%. So see, carry, what is this carry? Carry is nothing but carry, which is all about the once the private equity fund return the invested capital back to the investors. See, on remaining profit, fund manager asks for a profit share, again 20%, apart from incentive fees and all. So that's how we can say it's a carry fees, and that we calculate in a waterfall. Waterfall is nothing but it's a process of the repayment of capital and returned, like interest payment back to the investor. So that process we can call it as a waterfall. Okay, in a waterfall, see, this product, it's very huge and big. We cannot cover in 1 hour, 2 hour, even in 10 hour. It requires 4 to 5 months, or at least I would say 30 to 40 hours. But I just want to give you high level overview, so how it looks like, so that all means if you have any if you see any questions in the interview, so you can deal with those questions. If I talk about closing, closing is nothing but once the first capital received from LPs, so that date you can call it as a first closing. And if I talk about commitment, commitment is nothing but commitment is the total committed capital. Let's say there are two partners, GP and LP, right? GP committed 10,000 capital and LP is committed, let's say, 90,000 capital. So this total commitment would be 1 lakh, right? So this is how your commitment looks like. Then exit is nothing but uh, when the fund will the take the exit from the XYZ investments, or but from the private equity perspective, this exit would be all about the the termination or final closure of the business fund, final closure of partnership business. So finally, I mean, fund manager or investors both will come together and they'll take a decision to finally, the close out the business operations, and they'll process all the, the the benefits, or whatever fund is remaining in the books of fund, they'll or partnership, they'll return that funds back to the investors. So this is how your private equity partnership structure looks like. So now, in short, if you ask me, sir, tell us, like, very high level, the view on private equity. Private equity, it's a partnership business. General partners and limited partners, both come together. They establish limited partnership through LPA agreement, decide, or agreed on terms, and execute the agreements to kickstart their private equity business. So if I talk about general partners could be Blackstone or any individual who want to take care of day-to-day operations of the private equity fund. And if I talk about the LP investors, like insurance companies, family funds, or universities or trust or HNIs, the governments, all the can join the private equity fund club to invest in the startup companies or private limited companies, or any like distress the companies and all. So that's how your private equity fund looks like. Now, if I quickly walk you through the strategies of private equity fund, where can we draw this? Okay. Like, uh, buyout, LBO, and real estate, venture capital, secondary. So this could be the popular, the strategies which comes in the private equity fund. So in short, if I talk about buyout, it means buy major stake in targeted company. So, for example, let's say ABC private equity fund can buy 10%, 20% equity in any ABC company, BCD company, D company, right? So that strategy you can call it as a buyout. If you talk about LBO, it means provide, sorry, again, buy business on credit facility. It's like a home loan. So it means you can contribute, your own money a little bit, and also you can raise funding from the other partners on loan, and then you can buy business. So that would be your LBO business, leverage buyout. Leverage, it means loan. Buy, it means purchase. Out, it means just purchase the major portion of the business on loan. For example, let's say Twitter X deal. Elon Musk, only invested 4 billion, but rest $44 billion Elon Musk raised from the private equity funds or businesses or banks. So that deal you can call it as a LBO. Real estate, it means open plots or malls. The private equity fund can target and invest. Venture capital, already we have discussed. This could be the one where fund can target to the startup businesses. Secondary, it means if any business is, let's say, distress, like, now is going through the very difficult phase, so those businesses you can call it as a distress businesses or risky businesses. So in those businesses, private equity funds can directly purchase, equity and provide capital to them. So this is how your private equity strategies basically, you know, looks like. See, there are lots of things to discuss in private equity, but again, uh, your course is something different, so I cannot, put more stress on this one. We have lots of obligations to complete, the other things. But yeah, this is something high level things I would say, which will of course help you in a, if you get any opportunity to try for a private equity accounting interviews, then you can. Companies like Apex, Citco, BNY, JP Morgan, all they have, this private equity vertical, and they're hiring private equity accounting, recon, trade processing, or NAV calculation profiles. And definitely you would see questions around the private equity stuff. And this was all about private equity, guys. So let me know if you have any questions. Otherwise, I'm done with your private equity. I'm trying to just take a print for you. All right. So let me know if you have any questions. I think I got one question from Suraj. How many members needed and what the key documents to provide SEBI in venture capital? Your proposal, investment proposal, one or two, minimum two people, which is required. Even one in a team, you might need legal advisor, then the MLRO, anti-money laundering officer, auditors, all basically those would be required, and even the approval from banks or brokers, so that even you're busy with documents, you can submit with SEBI with a prescribed format or application. They'll go through it, they'll review it and provide approval to you, and then you can form your venture capital. Same for a hedge fund and even private equity as well. All right. So any question, guys? No questions? Any questions if you have? So quickly, post in chat, because I have seen like you guys are like very like lazy guys. If you have a question, say it yes, no. If you don't have a question, then tell me, sir, we don't have any questions, so we'll close the conversation. I don't want to just stretch and ask for the same thing. Hey guys, do you have any questions? Do you have any? This is something I hate this. And what happened to you guys? Even to text two words in chat. What happened? Is it something really difficult, or just like seems like you guys are arrogant? This is what my feedback is. Only two people which I have seen, like they are very active, and just at least respect what I'm giving it to you guys. But anyways, it's your personal life. But trust me, with this attitude, You can't survive in corporate. If you join my team, then you'll pray to the God. I don't want to work in this company because with this attitude, I don't entertain anybody. I'll just fire in just 1 week. Otherwise, I'll put people in PIP. I'll give only two things: change your attitude if you want to survive or continue with my team, or else just get out of my team or business. Anyways, it's your personal life. I don't want to give a preach again and again on same topic. Yes, Suraj. For the venture capital and private equity, both are not same actually. But the venture capital, you can say it's a small brother of private equity. Private equity for a professional funds where you will not have any the capital limit and all. Maybe you can build, let's say, 10,000 crores or 20,000 crores, or even 100 lakhs crores amount of fund, right? But if I talk about venture capital would be for a small uh, capex like 1,000 crores, 2,000 crores, 5,000 crores fund. But in terms of regulatory requirements or expenses, private equity funds need a more the expenses to operate it, because there would be very highly strict regulations on private equity. But if I talk about venture capital, so venture capital,